Jameel Ahmad in London. He's Director of Investment Strategy at NAGA. Great to have you back with us, Jameel. Now, the price of Brent crude, I'm looking now, has just eased back slightly from that $70 a barrel mark. But it just adds to that story that oil is recovering since the depths of the pandemic last year. Can you tell us more about what's behind the recent rally?
Thank you, Oscar. 2021 has been a very positive story for the oil prices so far in the first quarter of the year. As it stands, we have WTI, which is often referred to as US oil prices, are up 30%. Its Brent crude counterparts are up about as much as well. And we're touching the highest levels since roughly January 2020, very early into last year. Now, what is going on exactly is that we have the OPEC decision last week where their more cautious approach not to change strategy is seen as slowly but surely helping oil prices increase their momentum later in 2021. We think that US oil prices, WTI oil that is, can touch towards $70 later in this year. But you've got the global economic story where the vaccines are being rolled out. There's a lot more optimism that economies in the second half of 2021 can get as close to what we have been at the later stages of 2019 and early in 2020. That is positive for price. And then we've got this story as well of the unfortunate geopolitical increase in tensions over this weekend, but that does come and go from time to time. We just hope it doesn't escalate any further than that.
Now, markets have also been watching developments on the Biden administration's $1.9 trillion stimulus package, which is now a step closer from becoming reality after it passed the Senate over the weekend. How do investors feel about that?
So investors are really changing their calculations for 2021, including myself. We thought that 2021 would be the story of the dollar continuing to weaken. Obviously, 2020, the second half of the year, was the worst half year for the greenback, the US dollar, since roughly the global financial crisis. And we thought that story would continue into this year. But the fiscal stance and the monetary stance from the Federal Reserve and the US government has been very aggressive towards the pandemic. Obviously, the United States economy has been hit very hard. There's been up to 10 million jobs lost. But we see that 1.9 trillion US stimulus package in particular adding some weight towards helping consumers get through this very unprecedented time. For example, consumer spending equates to as much as 70% of the US economy and GDP. So perhaps that money will help the US economy through these uncertain times. And essentially, the US economy should look like it's going to outperform its counterparts in Europe and the United Kingdom this year. So this is adding some weight to the greenback. At the same time, we don't believe any more stimulus is coming anytime soon. So investors have also got temptations to take profits on still very high levels in world stock markets.
Okay, Jameel Ahmad in London, thanks as always for your analysis.